Hello, agents. Hello, everyone. So I've been hearing a lot about $500,000, what to do with it, this and that, but they never really go into a plan. I can never find the actual work behind this great $500,000 investment they're offering. So I decided on the insurance side, we'd just go ahead and show the work, show you what's available for a risk adverse person with $500,000 who doesn't want to use any of it, who wants to keep the $500,000 as a principal without invading it. So let's take a look at some insurance options for $500,000 using split designs. So basically, we're going to start with the traditional, true, absolutely true, the split annuity. So the split annuity here, we're going to say you have $500,000. So that's going to be your premium charge. That's your fully charged $500,000. That's how much you have. So we're going to take a little of that energy and throw it over to a MYGA for $323,509, a multi-year guarantee annuity, right? Fixed rate product. We're going to put the rest of that energy over $176,491 into an immediate single premium immediate annuity for the income side, right? So that energy, that premium energy we sent over to the SPIA is going to generate an income of $1,753.31 for 120 months for 10 years, right? So that's going to do, that energy generates this check, 120 of these checks. The other side is going to that money we put over there, that the premium energy we put over to the MYGA is going to run at a rate of 4.45 guaranteed for 10 years. And what that's going to do is recharge your premium battery, right? So at the end of 10 years, you'll have $500,000 of premium again. So you'll have a fully recharged premium battery, if you will. Your $500,000 has been completely set up. The income on the other side, however, completely ends, right? Your income here becomes zero. Now, the cool thing about split annuities is people like to use them to offset, to get more income without having a huge tax. So when you use full, like cash, non-qualified money, in this case, you would have an exclusion ratio of 83.9%. So that 1753 would come out at about 84% tax-free. So, or tax excluded because it's a return of principal and interest. So that helps people for those first 10 years generate income, that extra 1753 a month, without actually having like full taxable income on that whole amount. So that's the main idea with the combo split annuity there. But let's say you don't need the income. Oh, yeah. First, let me show you my work. So here's the work. 176 kicks off that 1753, and 323,509 will grow back to $500,000 in 10 years. So there's the work behind it, the actual illustrations. But now, if income's not needed, like I was saying, there's other options. So if you don't need to pull the trigger right away on that income, you can use an income rider product for that SPIA side instead of the SPIA. So like basically a deferred income product. So assuming a 6.85 roll-up rate, that 176,491 that was going to be, that battery charge that was going to give to the SPIA, we're going to now put that into a rider product with that roll-up. So if you were 55 at the time you decided to do this split, and you pull the income at age 65. So now your $500,000 is being recharged, right? And this 176 will now be able to kick off an income of 17,117 here for the 55-year-old pulling at 65. The 60-year-old pulling at 17 gets 18,800, and the 65-year-old waiting to 75 is pulling 20,540, which is basically 4.11% of the original 500,000. So they have their $500,000 back. They made an investment into an income rider product that is now going to kick off 20,000 a year. So now they have their 500,000 plus they got 20 grand a year. They're age 75 years old. So that's one option there. If you don't need the income right away, you can do that. Pay off debts. Knowing the premium battery will recharge, right? So you have 500,000. Maybe people are sitting with the whole 500,000 because they're worried, like we might need money in the future or something. Well, you can use this one, put the money in, do the split, use that 176, pay off other debts, lower your monthly expenses that way, and free up current income being used for those expenses, and maybe just loosen the stress of the everyday environment, knowing that after 10 years, your $500,000 will be fully recharged, replaced. So it's a way to offset, certain things like that. So let me move this out of the way. So, and leave it liquid. So if the clients want to participate in a higher rate, but and they need liquidity to feel safe, a split annuity may give them this option. So if no income is needed, clients can choose as short as a 24-month MYGA. So let's look at 36 months. On $500,000, a split would leave $56,781. So while $443,219, right, would recharge back to $500,000, currently at the 4.1 rate, that leaves $56,781 for emergencies. They can put in a CD. That's really, really liquid. So I don't know how much people are tying up. I've seen stories of people tying up all their money just to have a little liquidity. So, and additionally, you have some pre-withdrawals on the MYGA, but these are just a couple of other options if you don't need money, you don't need the income, but you want to make sure you grow your principal 100% back to where it was. And so I'll show you the work on the income rider. So this was the 55-year-old, 17.7, the 60-year-old at age 70, 18,000, and the 65-year-old at age 76 gets that 20,000. So that's the work on that. Yep. So here's some information to review. You can pause the screen there, just some disclosures and stuff. But in general, the idea, what we're trying to get across here is, no, lower that on a guaranteed basis, we can do a lot, and you may not even understand or know it. So if you have a income target your clients are looking for, or some type of growth or some kind of liquidity, we might be able to do it all today with fixed products if we get a little creative. So hope you all like that split annuity design concept there and understand it, and hope you all having a great week. Happy Tuesday, and see you soon. Thanks. Bye. Oh yeah, follow, like, call me right here if you need any questions. Follow on LinkedIn for the most up-to-date information. Thanks. Bye-bye.